95% of prop firm traders fail to ever make it to a payout, with gold being the most losing pair across multiple prop firms. Now, of these 95%, the majority of these traders are using overly complicated strategies and concepts, and then they blame their psychology for their lack of success. Now, this is a simple scapegoat in order to avoid addressing the real problem, which is not actually having an edge in the market. I know this because 5 years ago, I was also in this same position, but what switched for me was 3 years in when I started to adopt a simpler and more systematic 5-step system, which helped me to trade gold more consistently. It helped me to get my first payout and ultimately go full time as well. So in today's video, I'm going to be breaking down this full 5-step simple system that you can use, just incorporating a few different price action concepts, including liquidity and market structure. I'm also going to be walking through the exact trading plan that I personally use, and we're going to be walking through everything from the technicals to the risk management, and also how I personally go about improving and constantly tracking my data in trading as well. So let's not waste any more time. Let's head right over to the charts and let's get straight into step one. All right, guys, so thanks for joining me here over on the charts. So we'll get right into step one of the strategy, which is to identify higher time frame market direction. Now, this is arguably one of the most important parts, because if you can understand higher time frame bias and direction, you can predict exactly where price is going to go moving forward with a high level of accuracy, and then everything else just becomes kind of like the cherry on top. So with that being said, this is the most important part and is the most important part to focus on. So first of all, to identify higher time frame market structure, I'm always starting off on the daily chart. Here on gold, we can see that price was very clearly in this uptrend, and it had been pretty much for the entire year. You can just see this very parabolic price action. So in a case like this, what I'm only looking to do, I'm not looking to call the top. I'm not looking to short the market down. I'm very simply looking for more buying opportunities in line with this bullish trend. One thing I will always do, however, obviously in this case it's very evident and it's very clear to see that price is in this bullish market. But one thing I personally will always do is just mark on and map on the current structure. So here we can see we've had this most recent breaker structure. This is the current bullish leg on daily time frame. This is the current higher high that price created. Price then entered this retracement phase, coming back down. So it's important to be aware that once we have a move like this, that this move down is likely just going to be a retracement phase for price to put in a new high eventually, rather than seeing this as a reversal, right? Because we know in this case that because gold was in this very parabolic bullish trend, the likelihood that this is the exact top is, it is close to none. And more often than not, the one thing that I see a lot of traders making the mistake of doing is when gold is parabolic like this, they try to call the exact top. They try to short the market down because they think they know when price is going to reverse, when in all honesty, it's just better to wait for more continuations higher after price has done retracing. So here we can see that price came down. This was the current bullish leg. That is all I'm going to do on the daily time frame. I then break it down to the 4-hour. This is still encompassing step one, by the way. So what I'm essentially doing is I'm just mapping on the current structure and breaking it down onto the lower time frames to see more clearly what price is doing. So here we can see that after price came down, it swept an area of previous liquidity, in this case this kind of floor of support where we had 3 or 4 taps of the same area. Once that was taken out, price also tapped into a 4-hour demand zone. And once we see this, you can see price very clearly starting to create that upside momentum once again. And also crucially here, what it did was after this retracement phase down, it started to break this bearish structure that we were in and flip back bullish. Here you can see this was the first indication that price wanted to shift back bullish. And this was also our first indication that the retracement phase was over, when price essentially created a change of character and broke the most recent lower high. For anybody unfamiliar, a change of character is very simply when price is in a bearish trend like this, creating lower lows and lower highs. A change of character is when price creates a higher high and is an indication of a trend reversal. In a bullish market like this, a change of character is when price breaks below the most recent higher low and again is an indication of a trend reversal. So that's exactly what we have in this case. Obviously in this case it's not a trend reversal, it's just a signal that this overall pullback has come to an end, because this was just the internal structure, right? So once we see this change of character happen, This is when we're moving over to step 2, which is to identify a point of interest, which is an area where we could see price pull back into for us to actually buy from. And for myself, for a point of interest to be valid, I have a few different criteria. So a point of interest, if we map out the criteria here, is very simply an imbalanced supply or demand. So in the case of a bullish market, when we're looking to buy, we're obviously looking to buy from demand. We are not looking to sell from supply in a bullish market. And in an overall bearish market, we are looking to sell from supply, but we are not looking to buy from demand, right? Hopefully that makes sense. Essentially, we're just looking for continuations in line with that higher time frame direction we identified in step 1. And to do this, we're looking for any areas of imbalanced supply or demand, and also we need to see some liquidity being created above demand or below supply. So in this case, in the case of a demand zone, we need to see some liquidity being created above it. So notice here, price starts to retrace, right? If we just play price on a little bit, but notice here, right, how price comes into this area of demand. So you could say, and ordinarily people would be looking to buy from this level. The reason why this one would not be valid for me is because we haven't seen any liquidity being taken out. Notice how price just retraced into this range. The next liquidity level is this low right here. And then we also have a very nice demand zone positioned just below it. So for this strategy, what I'm looking for is for the liquidity itself to be swept into the demand zone as a point of interest. I'm not looking to buy above this liquidity level because I know that there is a high probability that if price is going to move over to the upside and continue with this bullish trend, this low at least is going to be taken out before price does that, right? So what I'm looking for here is for price to take this out into the area of demand. And as you guys can see, eventually that did happen. And this is also an important tip for you guys. This will very nearly always happen where price comes to these areas of support, does a small bounce, then continues lower. And this is what you're looking for, right? You're looking for these traders up here to be taken out into that area of demand. And as a general rule, before buying, we always want to see previous lows taken out. And before looking to sell, we always want to see previous highs taken out, right? So now that price has come into this area of demand, this is going to take us over to step 3 in the trading plan, which is very simply our lower time frame entry model. So what I'm always doing for the entry time frame, I'm always using the M5 chart. This is very important because I think a lot of people get kind of confused and there's a lot of uncertainty in their trading because they use different entry time frames depending on different things that happen. But me personally, what I find best is to use the exact same entry time frame on every single trade. So I'm always using the M5 time frame. What I'm looking for on the M5 time frame is a change of character. So again, for those of you that are unfamiliar with this, I'm looking for the M5 to be coming down in this bearish trend, presenting clear bearish structure. For an entry, I'm looking for a closure above the most recent lower high in this downtrend. That's the change of character we're looking for. And this basically just shows us that price wants to reverse from this area because it goes from this bearish structure back to bullish structure, meaning that the M5 time frame is now realigned with higher time frame, which is overall bullish, right? So here we can see, if we just quickly map on the structure, you can see that price came down, clear bearish trend, right? But once it comes into this demand, something interesting happens. It creates a higher high as opposed to creating lower lows and lower highs. This is our change of character. Once price broke above this high, that is the first indication that I wanted to shift back bullish. All I'm simply waiting for then is I'm waiting for price to retrace into an area of imbalanced demand, in this case, as you guys can see right here. Once again, I also ideally want to see some liquidity being created above it, because if price is going to move higher, it is nearly always going to retrace and take out previous lows first of all, because that's kind of what fuels the move to the upside. So here we have this previous low resting above demand. This becomes a valid entry for myself. I'm looking to set my limit on this area, and this is the next important step, which I want to mention. I am going to mechanically target a 1-to-3 risk to reward ratio per trade, and that's going to be an important part of this strategy because it makes the TP rule mechanical so that there's no discretion and uncertainty in terms of where you target. One of the things that I always see people making the mistake of doing is that they will have this very discretionary TP rule where, for example, they will see an area of supply to the left, they target the supply, or then they see a liquidity level, they target the liquidity level, or they see an imbalance, they target the imbalance. But the truth is, if you don't have any consistency in terms of where you're actually targeting, such as a mechanical TP rule, your results are going to be very sporadic and unpredictable. And as traders, we want a predictable and reliable income, right? So to make this as repeatable and mechanical as possible, I'm always using a 1-to-3 risk to reward ratio per trade. And in terms of risk management, what I'm simply doing is on my personal accounts, I'm doing 1% risk of my account balance per trade. And on live prop firm accounts, I'm also doing 1% risk per trade as well. On challenge phases, myself personally, I do 2% risk, but that is because I'm comfortable losing some challenges, and as long as the payouts essentially cover the challenge fees, I'm comfortable with that. Obviously, guys, experiment with this yourself and base it off what your max drawdown is, right? So what you should be risking, ideally, should depend on your maximum loss streak historically. So let's say your max loss streak before was 10 trades and you are comfortable losing 10%, then I would risk 1%. If you're not comfortable risking 10%, then maybe drop it to 0.5. This entirely depends on your own situation, but this is just what I personally do. I risk 1% on these trades. So all I simply do then is let price tag me in. I do not manage or actively manage the trades. I simply let them play out to stop loss or take profit. And the reason I do this is based on 5 years or so worth of data, which shows that holding to stop loss or take profit with this mechanical 1-to-3 TP rule was actually more profitable than making break even or taking partials. So that is the exact reason why I do that. And that is very simply the entire strategy. So this might be a little bit confusing, guys, but bear with me. We will go through a second trade example, and this time we will look at a sell side example instead. All right, guys, so thanks for joining me back here over on the charts for a second trade example. This time we're going to go through a sell side scenario, which is the same process, but obviously we're selling instead of buying. So here on gold, we can see that on daily time frame, price had overall been in this uptrend, but at this point when it reached around 27.90, it impulsively moved over to the downside, and importantly, it broke past multiple areas of structure. It broke past this area, and it also broke past this current higher low. So on daily time frame, we can say that this was a change of character because price very clearly felt the bullish structure and created a lower low. We then see price retrace back up and also come into and tap into an area of daily supply right here, as you guys can see. And also, again, focusing on liquidity, we can see that price swept the initial inducement just below that area and starts to react. Now, one important thing about using this liquidity approach is that we don't actually need to be right about higher time frame market structure and direction. And the reasoning for that, and the reasoning behind this, is because let's say price did something like this, right, where it continues down, then continues over to the upside. In this sense, right, we were wrong about price being bearish, but we can still look to capitalize on a move into the opposing liquidity. So notice here, looking to the left, and this is one of the things I like to emphasize to the guys inside at VIP, is constantly look to the left and ask yourself, is this a level where price is likely to reverse from, or is it more likely that price at least sells off into this opposing liquidity that it has created down here, right? I personally think that the probability that price continues to buy from here, considering that it has broken bearish on daily time frame, reacted and held a daily supply zone, swept daily liquidity, the probability that it heads into this liquidity is extremely high compared to it reversing from, say, this level, right? So if we jump over to hourly time frame as well, here, this kind of confirms the bias. You can see very clear sell-in volume and clear bearish structure on hourly time frame. Just mapping on the structure real quick, we had this initial change of character. Price came up, held the supply zone and fell to break past it. We then saw price continue to print this clear bearish market structure, as you guys can see right here. So what I'm essentially looking for here, right, considering the momentum as well, is a very clear area of supply where we could potentially look to position ourselves into some sells down to target this opposing liquidity at these previous lows down here, right? And once again, looking to the left, is this area here significant enough to cause a complete reversal? Probably not, especially against all of this volume, right? So we're looking to continue selling down into that opposing liquidity. Here, what stands out to me is that we have this area of supply on hourly time frame. clear area of imbalanced supply. Price has created some liquidity below it, including the Asian high. So what I'm looking for now is for price to come up into this level. Once price comes up into this level, once again, rinse and repeat in the same thing. I'm hopping over to the M5 chart. Right, so price has come up into this area of supply. Asia high has been taken out. We haven't seen a change of character yet though, so just waiting on that. And once again, guys, for a change of character, and this time for a bearish example, we need to see price creating bullish market structure. Once it comes into that area of supply, we need to see price create a lower low. We then need to see a retracement into a supply looking to short down, right? This here would be our change of character. So let's have a look if price presents one in the end. Yep, there we go. So as you guys can see, if we just map on the structure, you can see that price creates higher highs and higher lows. Once it comes to this point right here, we have that lower low being created. This right here is our change of character, as you guys can see. This case as well is very nice because we have this clear imbalance being created. We have a clear area of imbalanced supply just here. I would take this whole region right here. So what I'm simply looking to do, set my limit on this area of supply. Stops a little bit above the high. One mistake I commonly see people making is that they will have a stop loss like this, literally like just very, very tight, just above the high. In my personal opinion, that's, you know, it doesn't really make much sense because gold could definitely still wick out this high and the trade would still be completely valid. So what I would position the stop just a little bit above that high. If it comes to this point, the trade is clearly invalidated, so I don't want to be in it anymore. And we can still get a decent risk to reward on this as well, right? We don't need to have a completely sniper entry. We could just target, like I said before, we're going for a mechanical 1 to 3 TP. And as you guys can see, we don't really need to target very far in order to achieve this, even if we have stops up here more conservatively above the high. So in this case, this is a trade I actually did take back in December, so obviously I know how it plays out. But yeah, there we go. TP hit on that one. Very nice. Price comes up, taps the supply, and then moves over to the downside. So once again, guys, a very simple mechanical process. Quick summary of what we're looking at. Higher time frame market structure and direction, lower time frame, or in this case, hourly point of interest, and then M5 change of character, plus imbalance, mechanical 1 to 3 TP, 1% risk per trade, and that is literally all there is to it. Now, before we end this video, let's go through one final trade example, just so I can show you guys as many trade ideas as possible, because one of the things that, obviously it's easy to watch me do this on the charts, but one of the things that is not so easy to do is replicate this in the live market, and that's because, to be honest, it's not the actual strategy itself, but it's the process of seeing it play out over and over again. So the more trade examples you see, the better you will be able to identify these setups yourself in the live market. So with that being said, let's go through a third and final trade example. Alright guys, so third and final trade example. In this one, I wanted to go through a situation where price was a little bit more tricky to read and it was kind of stuck in a bit of a consolidation phase. And I want to go through how I would approach this situation from a sort of lower time frame and market structure perspective. So over here on the charts, as you guys can see, and as from before, price was still in this overall bullish trend right here. This was our most recent breaker structure on a daily time frame. We then had price come down, sweep these previous lows, and similarly to before, price tapped into that 4-hour demand zone. I'm not going to mark it on again, but you guys have already seen that. Now, if we go over to the 4-hour chart, what we can see is overall this was a little bit more tricky to read, right? We didn't really know whether price was bullish or bearish because it was kind of stuck between these highs and these lows, which it had tapped multiple times. So what I would personally do in a scenario like this is I would be looking to trade the internal trends and structure inside this consolidation, being aware and mindful that overall higher time frame is still bullish. So the likelihood here is that we still see a breakout of this consolidation to the upside, right? So crucially, what I want to focus on here is how price was overall in this consolidation. There wasn't really too much of a clear direction, but price had retraced down, and notice how it's impulsively reacting from this area of daily demand. Once again as well, looking to the left and asking ourselves, where is price position? So notice how here we have this very clear volume heading up towards this next high, but that next high has not yet been taken out. So using this liquidity approach, we don't have to be right about higher time frame direction. Price could still do something like this and reverse. But because we're using liquidity, we know that there is a high likelihood that price at least comes up to target this previous high, right? So we can look for buys up into that high. Now, if we look at lower time frame structure, we can see that once price tapped into this daily demand zone, we had price shift back bullish on 4 hour. Just here, you can see that once price was kind of in this bearish trend approaching the demand, but once it came into that demand, we had that very clear shift back bullish. And also just pay attention to the momentum here as well. Very clear bullish momentum coming back in. Just look at how impulsive that candle was. I think that was like a couple hundred pips. Yeah, so that was like a 400 pip 4 hour candle. Obviously, we don't want to be selling against that. So breaking it down to the 1 hour, we can see that price later then broke structure once again, just here, right? Now, once price basically presents something like this, we're looking within the hourly bullish leg, which is in this case, this leg right here. We're looking for an area of imbalanced demand. In this case, we can see this whole area that price created. This is kind of where the volume came in. So once again, we're waiting for price to retrace into this area. Once it retraces into this area, as you guys can see right there, we are going over to the M5 chart. And once again, we are simply looking for that M5 change of character. So here we can see that we perfectly get that. Previous inducement was swept into the demand. Price creates a higher high just here. That's our change of character. In this case, we also have this area of imbalanced demand that price tapped into. Notice as well how it kind of creates this inducement above it. People are trying to buy here on the breakout, but price comes down to collect their stop losses before moving over to the upside. So this would be the trade for me. Entering on this area of demand via a limit order. So the entry would have been here on this candle. Stops just below that low, and as always, a 1 to 3 mechanical TP with 1% risk per trade, and we simply let this trade play out. And as you guys can see, this one eventually did come down a little bit lower. Remember, I said that one thing gold likes to do is sweep the first tap of the demand zone, as it has done in this case. But because we had that smart stop loss placement just a little bit below the low, allowing some breathing room for the trade to play out, we managed to stay in this trade, and price eventually headed over to the upside and eventually did hit TP, as you guys can see right here. And like I mentioned before, I don't make any of these trades break even for this precise reason, which is that price will very often come down and retest your entry. And like I said as well, this is based on the data. The most profitable approach was to kind of use this set and forget approach, stop loss or take profit with a mechanical 1 to 3 risk to reward per trade. So guys, if you are going to take away one thing from this video, let it be this. The simpler your strategy, the easier it's going to be to repeat in the market day after day, and thus the easier it will be to make consistent money and payouts with it. Now guys, I also had a doubt this week. I thought about maybe stopping doing these videos just because it is diverting a lot of my attention and focus away from trading, which is my main business. So let me know in the comments if I should continue going with these videos or not. And as always guys, I hope you enjoyed this video. Make sure to like and subscribe, and I will see you in the next one.